Hello everyone, this is Adam with the TFM360 grain team here today, and this is your weekly strategy update video. So this is the grain strategy update for February 10th, 2020, and looking at some things here this week, we've got one strategy update as well as an update from the USDA. So let's talk about that first with tomorrow's upcoming USDA report. Typically the February report isn't a report that's very volatile, and just even looking at some of these numbers for where the average trade estimates are coming in versus the USDA's numbers in January, you can see that the difference is fairly minimal for the majority of these here. So I guess one of the biggest numbers that will probably has the most likelihood to change the most would be numbers coming out of Argentina and Brazil as far as production is concerned. But you can even see here that the USDA is still fairly close to the average trade estimate for the production coming out of South America here. So, just seeing average trade estimate of 49.97 versus the USDA in January was already at 50 here, and kind of the same situation for beans, 53.15 versus 53 for Argentina, and very similar numbers, maybe even smaller changes here for Brazil. So not expecting I guess a huge volatile report tomorrow, and some of that can also be supported that with this February WASDE report kind of infographic that we have here at the bottom that just rates how volatile the report is versus the other 15 reports that we get from the USDA throughout the normal year. You can see a lot of red on this chart, meaning that 14 out of 15, it's one of the least volatile reports that we have of the year. So just not a lot of change, especially for corn in particular. And on the day of for beans, it's really not too big of a negative change or an absolute change number coming from the results of the report themselves. Now with beans, there are 2 weeks after. It does have one of the larger net changes or absolute changes, and a lot of that probably has to do more so with the time of year with Brazil harvest and just other factors that are coming this time of year, not really to do with the report, which you can see the day of numbers are fairly minimal as far as change is concerned. So be on the lookout. There's always surprises from the USDA, but if tomorrow is anything like the normal February WASDE report, it will not be particularly volatile. So now let's focus on the managed money funds as well as commercial end users positioning. This is something we usually like to take a look at from time to time here on the video, and just to give everyone an update with where things are at. Starting with corn, we have seen managed money begin to get fairly net short, added a good amount of shorts last week, getting 26,514 contracts, so almost half of what they currently have on now were added last week. And then also seeing commercials getting, they're still net short, but they're purchasing some of those back here, adding 31,401 longs last week. And when we've got both of these numbers negative here from the commercial end users and the managed money funds, that is kind of a conflicting sign from the market that typically you'd expect to see these two individuals on opposite sides of the spectrum, and that's something that we can see here on beans. If you look at the current managed money positioning, a pretty, I wouldn't say extreme, but a fairly net short position coming into this week at negative 82,358, and 31,403 of those were added just in the most recent report, the recent week here. And then looking at commercials, this is seeing that we're typically commercials are usually going the other direction of managed money. They're actually long 59,323 contracts here. A substantial portion of those added over the last week as well. So that to us is a fairly good indicator that we could be nearing some level of support here for the soybean market. Just kind of consider commercial users the smarter money. They're buying value a lot of the time, so as they get more long, that means you're probably approaching the value zone for soybeans, whereas as managed money continues to get more short, they're leaning into positions they already have established, and if they need to end up buying these 82,000 contracts back, that could, or even just either whether they want to go long or just get back closer to a net neutral position, that could certainly push the market higher, especially if something bullish comes out of the report tomorrow. Now moving on to wheat, kind of seeing I guess the opposite from soybeans, whereas managed money has now gotten a decent long position here at 52,000 contracts, while commercials are now short 31,000 contracts, and both sides kind of adding to that position as of last week in fairly similar numbers. And just wheat in particular does have one of the not largest net long positions, but a just overall amount of long positions that are currently in the market right now on wheat for managed money. It is basically at a record. So that's something that keeping a close eye on here as well. So moving into what's going on this week, this week's update highlighted in red here. We are deciding that we want to buy cover 25% of the 2020 soybean crop with November 980 calls for around 25 cents, and a lot of that relates back to what we were just talking about in managed money, that we've got this substantial net short position while commercial users are getting long. That's typically a sign that we could be getting close to value. Originally, we were going to do 50% at 8:30 off the front month to get 960 calls for about 20 cents, and that was going to be a 50% purchase as far as the increment we are covering. And so now that we've stepped kind of ahead of the game early, done 25% now, we're going to wait on that next 25% coverage if we do end up getting to that 8:30 level. And then upside targets week over week have remained identical. And so just to give everyone a bit of a visualization of what's going on in the soybean market here, this is just a continuous soybean chart on a daily level here. And I guess one of the things that can stick out right away right now is just we have this potential for a double bottom here in the chart off that same level we did end up bouncing off of on some positive trade rhetoric towards the latter part of 2019, and if we do that again, we could see a similar retest of the previous highs that we did get back throughout here. So that's part of the reason that we wanted to jump on that 25% now. And down here, the secondary red line that I have that I'm kind of drawing on over right now, there is actually a gap on the chart right here. This is part of the reason that we are looking at that 830 level, other than that it would be fairly oversold. And if we get into this zone, we can see a lot of congestion as far as price action is concerned in this area, and it looks like a good opportunity to get that second 25% of re-ownership in place for 2020 soybeans. So on corn, actually no changes here. Just to reiterate, the next sale target for 2019 corn, we're basing it off of the March contract. If we hit 393.5, we're going to want to sell another 10%. And strategy for 2020 is also identical in that if we get to 417 off of the December 2020 contract, we'll want to get 15% sold and purchase $4 puts for about 18 cents off the December contract to cover 30% of the 2020 corn crop. And just a quick recap on here, since nothing really changed on corn. You can just kind of see there's a lot of consolidation as far as price action is concerned here recently. Haven't been able to go a substantial direction one way or the other here. So whether or not that's going to continue for a significant period of time, or we're going to break out of this kind of muck that we've been stuck in for a while, it's hard to say. But we'd like to get a little bit more confirmation from the market one way or the other before we're going to be adjusting strategy too much here for now. and even just bringing it all the way back to managed money at the start of this conversation here, seeing that there is kind of that just difference between managed money and commercials, and that they're both short currently from a net position versus where we're seeing on soybeans. We're seeing that managed money is significantly short while commercials are long. So not the same picture and less of a clear indication from the market what could be happening in the near future at least. On wheat, also no changes here, so I'll move fairly quickly for this just to give everybody a look at what's going on right now, but our next upcoming targets. But also beyond that, did mention that this is something we talked about last week as well, but just the managed money long only position is at that record level, so something to keep a close eye on, that if they decide that they need to get out of these positions, there's plenty of risk to the downside of liquidation. It's just somewhere even back into this area of consolidation. It's a pretty wide range, but you can certainly see that that's an area that they tend to gravitate to the majority of the time. So that's kind of the threat if they decide that it's not worth being long those positions anymore. And certainly from a chart perspective, you can see that wheat has had quite the run here, and the potential for running out of steam is certainly up there at some of the highest prices that we've seen in quite a while here, and have even pulled back from those recently. And I would say that we have been kind of sticking closely to this ascending trend line here that's moving upwards. We've stuck to it fairly well. I've kind of been poking below it a little bit here recently, kind of testing the waters. And if tomorrow was a bit of a bearish report for wheat, a break below this trend line could signify that there could be more downside risk to come, especially if those long positions decide, or the managed money decides to liquidate those long positions there. So that about wraps everything up here today. So make sure to reach out to your advisor to talk to them about the most recent recommendation on soybeans, and make sure it makes sense for you, and talk to them through that. And I hope everyone has a great week. Thank you. Bye.